Anyone who says that silver is demonetized, basically is rubbing up against common law. Common law based on Roman law, money, if you like, without counterparty risks, gold, silver, and copper. It's as simple as that. Now, obviously, we think in terms of gold. Silver is not priced as a monetary metal because if it was, then we would be looking at the sort of relationship to gold that pertained in the 1870s, or up until the 1870s, when there was about sort of 15 to 1 ratio,
In today's news recap, silver price seems vulnerable near $29 over 2-week low. Silver price remains under some selling pressure for the third successive day on Friday and touches a 2.5-week trough during the Asian session. The white metal currently trades around the $29.50 region, down 0.80% for the day, and the technical setup supports prospects for a further near-term depreciating move. Against the backdrop of the recent failure to build on the momentum, this week's breakdown through a short-term trading range support was seen as a fresh trigger for bearish traders. Moreover, oscillators on the daily chart have just started gaining negative traction and suggest that the path of least resistance for silver remains to the downside. Hence, a subsequent slide towards testing the next relevant support near the $29.15 region looks like a distinct possibility. Some follow-through selling below the latter might expose the June monthly swing low. Silver price could eventually drop to the 100-day simple moving average, currently pegged near the $28 mark. On the flip side, any attempted recovery might confront some hurdle near the Asian session peak. This is closely followed by the $30 psychological mark, above which a bout of a short covering move could lift the silver price back up. The momentum could extend towards the $31 round figure. Make sure you hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our recaps. Also, check our description for full credit details if you want to watch the whole interviews. Enjoy the episode.
The backstory to this is really quite simple, and that is that the Saudis under Mohammed bin Salman basically kicked out the CIA. That was when he assumed power. Basically, he locked up the CIA's operatives within the royal family, kicked them out. He realized that the Saudi's future is with Asia, not with America. So that tie had to be broken. Now, if the future is with Asia, then obviously, being in the Asian camp, they would be very sensitive to Russia's position. And Russia has made it absolutely clear in the various St. Petersburg economic forums since the sanctions were applied on Russia and her foreign exchange balance is frozen, that their property had been stolen, and no government with any sense would actually hold their balances in dollars or euros and get their gold into their own possession if it is, let us say, stored in London or New York or Paris or Switzerland even. So this was a message which was delivered to over 80 nations officially represented, 14,000 attendees from foreign countries back in the St. Petersburg Economic Forum in June 22. And the story has gone on from there. So really, I think that the message, the rumor, the story, whatever, that the Saudis have threatened to sell bonds is actually in accordance with what's happening anyway. I don't know whether they have actually said that. I haven't seen it. But there is no doubt that Mohammed bin Salman has moved away from America and the West because Saudi's main interests are now Asian. It's quite simple. It's India and China. And I mean, if you may recall, I think it was about 2 years ago when President Biden thought he ought to go and talk to the Saudis and persuade them to, if you like, increase their oil output. And I don't think he even got a meeting with Mohammed bin Salman. I mean, this was something which the Saudis just played down. I mean, they were polite, but basically piss off. And the next week, President Xi came in, and I mean, it was full ceremonial. It really was. Fighter jets flanking the presidential aircraft, and black chargers riding along by by President Xi's motorcade. The whole thing. Now that tells you exactly where Saudi's interests really lie. In fact, I had an inkling of this back in 2014 because I was speaking to a director of a Swiss refinery, and he was saying that they were taking in 400-ounce LBMA bars from Arab sources, which I assume includes Saudi Arabia, recasting them into the Chinese 1 kilo 4/9 standard, and returning them to their owners. So you think, why? Well, the answer basically is that they see their reserves, if you like, their store of money, real money as opposed to fiat credit, as being more marketable in Chinese standard than the LBMA standard. Now, that is a lesson for us. That was back in 2014. And here we are 10 years later, suddenly Bloomberg being surprised about what's going on. So
in today's news recap, gold and silver's high price recession. So China didn't buy any gold for its central bank reserves for the second month running in June, writes Adrian Ash at Bullion Vault. Chinese consumers have meanwhile vanished from the country's jewelry stores, and Indian households have also quit buying. Silver-backed ETF investment funds have grown less than 5% in size from last month's 4-year low, while gold ETFs ended June at their smallest mid-year size since 2019. After making out like bandits in 2021-22, retail gold investment dealers and mints are really struggling as high prices combine with high interest rates to crush Western demand for coins and small bars. The world's bullion markets this spring set new all-time gold price highs day after day and came within 1 cent of $2,450, while silver topped $32.50 for the first time since 2012, adding almost 45% in U.S. dollar terms inside 11 weeks of silver trading. Yes, that surge has burnt itself out. But silver ended last week with its highest Friday finish in London since the 11-year high it set in late May, down only 2.2% from that Friday's weekend peak. Gold, meanwhile, recorded its 5th highest ever Friday for U.S. and Euro investors. Even the British pound's clear relief at Labour winning a landslide UK election victory over the Conservatives still gave gold its 6th best weekend in history against sterling. Now we'll show you more clips of the latest interview, but first, smash the subscribe button, turn on notifications so you do not miss out our daily recaps.
Anyone who says that silver is demonetized, basically is rubbing up against common law. Common law based on Roman law, money, if you like, without counterparty risk was gold, silver, and copper. I mean, it's as simple as that. Now, obviously, we think in terms of gold. Silver is not priced as a monetary metal because if it was, then we would be looking at the sort of relationship to gold that pertained in the 1870s, or up until the 1870s, when there was about sort of 15 to 1 ratio, something like that. Obviously, we're now looking at 76 to 1 ratio. It is not being priced as a monetary metal. It's as simple as that. There is no doubt, however, I mean, you just look at the Silver Institute's estimates of supply and demand. I mean, there's been a deficit in terms of the sum of mine and scrap supply compared with demand. And that's a deficit which has been around now for nearly 4 years and is only satisfied by drawing down on silver stocks, above ground stocks, which predominantly are either held in investment hands or alternatively are held as strategic stocks. Now, strategic stocks were extremely common back in the old days. I mean, we're going back to the days when Bretton Woods was around. But it's not so common now, with one notable exception, and that's China. China has accumulated quite a lot of silver. I haven't been tracking that too much, But I do know that they have, in effect, been controlling the price with a view to accumulating stocks of silver. And the way in which industrial demand for silver has gone, explains that it was a perfectly rational thing for the Chinese to do. I saw someone the other day suggesting that a large seller might dump silver on the market to screw the price. I think that's extremely unlikely. It's too precious a commodity, an industrial commodity, for anyone to consider doing that, because they know they would just lose control over their silver. Why do it? So that's not going to happen. The fascinating thing is that virtually everybody dealing in gold doesn't actually understand the monetary status of gold. They've got this sort of vague idea, if you like, that there's a history and da-da-da-da-dum. But actually, they don't understand the legal position that gold is money and the rest is credit. This is the way it was described by J.P. Morgan back in 2012 to a committee of Congress. It's still true today. And this is actually based on Roman law, which goes all the way back to the 12 tables in 450 BC, formalized by jurors over the next 1,000 years, and then crystallized in Justinian's pandemics, and also the Basilica for the Eastern European Empire, and that was about 900 and something AD. So, and all the successor nations from the Roman Empire, which actually happened to colonize the world, have this in their common law, that gold, silver, and copper are actually money, or can operate as money. They are the money of last resort. Everything else is credit, whatever. So few people understand this. I mean, when I talk to gold bugs, supporters of gold, they're gung-ho for gold going up and all the rest of it, but they don't actually understand the status. And a lot of these people think that Bitcoin, is the future for money. But Bitcoin has no legal status as money. That's not going to happen overnight. I don't know how, I'm not going to get drawn into that debate. But the important point is that when you look at silver, when the price of gold goes up, which, as I say, is actually the value of paper currency going down, there's that faint echo in silver, if you like, that the more that this paper currency is going down, some moneyness is returning. The ghost of money is going back into silver. And, the relationship is a catch-up one. So what we typically see is gold goes up 1%, silver goes up just under 2%. But when the fears, if you like, surrounding paper currencies diminish and the price of gold drifts, then under those circumstances, silver drifts even faster. And that's why it has been actually such a disaster for so many for so long. But of course, now, with all these disasters, which I enumerated at the beginning of this interview, you can see that anyone with any sense can see that, the end of the fiat era is hoving into view. And under those circumstances, you've got to think about silver as a monetary asset, as real money, if you like, in the original legal sense. So I hope that answers your question.
Yeah, it absolutely does. And that's an interesting point you brought.
What do you think of Macleod's take? Do you agree with him? Will gold and silver plummet as China has stopped buying it? Are you scared of a massive meltdown? Post in the comments section your honest opinion and share your price prediction for gold and silver prices. Send this episode to a gold bug. Subscribe if you have not yet done so. And make sure you check this video right here because it's a perfect fit for you. I see you on the other side.